Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 24th of October 2021. And as I mentioned last week, today we're just going to have a market update and I've titled this A Change of Fortune. So we'll start with US dollar index on the daily scale, and this line here has been a long-term resistance line, and what I've done, what you can see here, so back in April price poked above there and then just got rejected downwards, and I suspected something similar would happen here, as I said a few weeks ago, and it's tried a couple of times but again it's been rejected. So is that downwards momentum going to continue? And this is going to be really important for when it comes to the precious metals. I think if we can get below 93, then yes, I think that's going to push things even further down. But at the moment, what we've got is a bit of consolidation area over here. Now, sometimes with these, you can get a little poke upwards to have another go. But I think this one, might fail. If it does poke above it, it'll be mild there and then potentially come down. Now, obviously, if you get a big, strong green candle coming through here, then I think that would have been broken. But it's just the long duration of that trend line that I think that's going to hold somehow. So, yeah, I think potentially just a small bit of upside here before rolling over for the US dollar index. Let's move on to gold priced in US dollars on the daily scale. Isn't this interesting? So what happened last week was price was going on, especially on Friday. Basically, we breached that $1,800 level, which was crucial. But obviously, we got knocked back down below it again. But we also broke this shorter term downsloping trend line. And so price broke above it, and you could potentially say that that's a retest of it. Now, that's one way of looking at it. The other way of looking at it, of course, is, oh, look, you've got this nasty long upper wick here, which can sometimes suggest more downside to come. So if you get a red candle, expect prices to come down further, maybe around 1740. But yeah, it depends what timescale you look at this on, you see, because obviously that wick doesn't show up if you go onto, 1 to 4 hourly timescale. And that could just look like a breakout and retest before resuming upwards. And remember over here, we had something similar. We had that long upper wick, tiny, tiny body. And so there was a bit of concern there about getting follow through to the downside, but, price just turned around there. So I'm wondering if that's actually what's likely to happen. If there is downside, probably going to be limited, I suspect, but let's see. Of course, this is the crucial level that we want breaking. So, I think once we get decisively above 1840, and I'm not talking about a wick here, we need a strong candle above that, then I think we're in a very, very nice territory here. And of course, the level that we're all going to be worried about here is the 1680 level, which we definitely don't want breaking. Looking at this price movement here as well, it kind of looks like a channel. That's one way of looking at it. Of course, if you were to join this one, then you could say it's a kind of rising wedge. So that's the other possibility there. But what could happen is you go here, go for another upside, and then come down here. That's another possibility. These things are so subjective, and you have to acknowledge that there's no right or wrong answer. Nobody knows with any certainty what's going to happen. Now, I thought we'd look at gold in a few different ways. So the other way, and people seem to like this last week, was looking at that distance from the 200-day moving average. And so what I've done here, I've looked at this high here, which corresponds with this high over here. And of course, we've joined that with this high here, and that corresponds to this high here. So if we look at that black line there, if that is indeed the line that we should be looking at, then actually we broke out of that back here in kind of Augusta, I guess that is, yeah. And so, I mean, obviously that doesn't stop. Well, actually, look, we broke out, came back and almost retested it, and then started moving up again. So the next thing I did was, let's look closer at this area here. And again, so we've got that top there, and then I've joined it with this high over here, which corresponds with this over here. And what we've seen here, just with that peak above this line here, now it's very hard to see, but if you look close up, it's just gone above that red line there, only just, okay? Now, of course, that doesn't mean that can't just turn around and come back here. That can, of course, happen, okay? And that's one of the things with looking at this, is that it depends on when you draw the line. Now, of course, if we hadn't seen all this price action, we could have drawn the line down here, and of course then the breakout would have actually occurred here. Now that doesn't mean it's necessarily wrong. I mean, looking at this would potentially suggest that the bottom was actually over here, and this sideways movement, according to this, suggests that this is actually promising for an upside move, I would suspect. But look, I haven't looked at this for long enough in a prospective manner. I don't think looking at these things retrospectively actually helps. You learn the flaws by looking at it prospectively. But yeah, I just thought that was quite interesting. Okay, and then now the other thing that we had looked at a few months back was this whole thing about the correlation between gold and silver. So this grey part here is the correlation coefficient between gold and silver. And you can see that most of the time it's very strongly correlated at +1, but occasionally it dips into negative territory. And what that means is that the gold price and the silver price are moving in opposite directions. Now, what we had noted before was that whenever it dipped below 0, so whenever this went negative and then came up back above 0, so this is where I've drawn the line where it's moving and has moved back above that 0 line. And you can see that here, price dropped a little bit after that, but then moved up quite significantly. The next time that happened again, that was actually not bad. Price was pretty much at the low there, and then price moved up quite substantially for quite some time, actually. Now, the next time we got that negative signal here was in June. And again, price moved down a little bit after that and then shot up like crazy there. Okay, now that all looked quite promising. And so I had used that over here. And when it had turned positive there, of course, we were at this level and price dumped straight after that. So, this isn't a 100% perfect signal here. Having said that, though, I mean, if this was, in fact, the actual bottom, does this give us a kind of slightly early signal of a potential local bottom? Who knows? Who knows? I mean, that was quite a large drop, though, so it's not particularly accurate. So you have to remember that. So after that, the correlation stayed positive, but again, it went negative over here, and again, we wondered if maybe price was going to go up from that point, but no, it dumped again. So again, it was an early signal, and then price moved back up again. So yeah, that's a tricky one. It's interesting that just before both these 2 points that this has happened there. So I don't know. Let's have a look at it. But it does look sort of like something that could be potentially interesting, but it doesn't tell you in terms of short-term moves. So if you're looking, within a few days, price can still dump beyond that. But perhaps it's more useful kind of on a longer-term basis. The other thing to remember is that when this correlation is positive, it doesn't tell you anything. Okay, so see, look over here, it was very, very positive, and of course price dumped then as well. So right now we're in that positive territory, so we're not really getting any kind of signal there at all. Next, we've got that parabola model that we've been looking at. Now, you know how normally I try to overlay this, which I've drawn in Excel, and what I've done here is the dots represent the major lows since about 2013 in the gold price, and then I used Excel to basically draw a best fit polynomial line there, and this is quite a good fit because it was 0.98. 1 is a perfect fit. That means all the lines lie along this. And so now normally I'd like to overlay this onto the trading view chart for gold. Now, unfortunately, my access to Photoshop, which I normally use to do that, has been severed. It's brutal, eh? Yeah, anyway, I kind of feel like I'm being slowly throttled right now. Anyway, so at the moment, what we've been doing is looking at week by week. So if this line is correct, then what I've been doing is giving you what the prices are for the kind of coming week. And so the kind of price on this line for the 30th of October comes to 1744. Now, obviously, price can dip a little bit below that, but the further below that it dips, the kind of worse fit this can become. So, yeah, that's what we're looking for over there. Okay, next we have silver priced in US dollars on the daily scale. And we had a very, very nice breakout from this downsloping channel, and it's continued. So I think that's looking quite nice so far. Now, just beware though, again, we've got that long upper wick, which always makes me wary. There's also the potential to come back down to retest this. Now, we kind of have already had a retest over here, but that doesn't exclude a further retest here. So look, this could potentially drop down to $23, okay, before moving, resuming kind of its upwards trends there. I'm not sure if it will go quite that far though. I mean, we do have a bit of support here, so maybe 23.50 might be the floor there. Okay, and then we'll look at the gold miners, and so that's on the daily scale. This is the GDX, and a similar picture. Now, the good news here is that we have made a higher high. So, of course, next we want to be sure that we've got a higher low. Now, I think we are going to drop down again, unfortunately. So, next week might be a bit of a downer. We've got this gap here, you see. But if you stand back and look at it, this could be potentially, if this does drop, it could be a potential head and shoulders for further upside. Now, of course, this all rests on the assumption of getting a higher low. Obviously, if we break this, then we're going to 26. Okay. Obviously, anything can happen, but I'm still biased to the upside in general. Okay, and next we have the silver junior miners on the daily scale. Now, we haven't quite made a higher high on this one, but again, the patterns are looking pretty similar. We do have this gap. This is a bit lower down than it was on the GDX here. So we're looking at about 12.50 potentially for that. So yeah, just watch out. We've also got what looks like this kind of rising wedge pattern here again, which makes me think we're coming down back here for a little while. Okay, so next week might not be so fabulous. But coming into November, potential is there. Now, the other thing I thought we'd look at was comparing the different types of miners. So I think one of our viewers had drew my attention to the GOEX, which is an index that covers the explorers, the gold explorers. So what I've done is I've got the GDX in black, in orange I've got the GDXJ, and in blue is the explorers index. And I think this kind of shows quite nicely how they differ. So what I've done, so I've made this on a percentage scale, and I've made the 0% the peak that occurred in 2012. Okay. Now, of course, if you change that starting point, you will get different relationships between these. But I think that's a reasonable starting point there. So when everything was at its peak, you can see here that the gold majors in black fell less than the explorers and the juniors. Now, interestingly, down here at the depths, I think there's probably about a 20% difference here between those. But I was actually surprised to see that the juniors and the explorers actually dropped by a similar amount. I thought the juniors would do a bit better, but no, they did equally badly. And we're looking at an over 80% drop in those values there. And I guess if you want to see how they relate to the upside, you'd have to kind of line these up really. Sorry, I haven't really done that today, but you can do that yourself on TradingView. But from kind of eyeballing it, it kind of looks like, again, the majors kind of doing better than the juniors, which in turn are moving up better than the explorers. But yeah, I guess I need to line those up there to 0 to ascertain that, or even over here, that will give you a good idea. But that's pretty common in bull markets. The majors start rising first, and at the end of the bull market, the explorers absolutely explode. They're absolutely massive returns right at the end, and so that's the danger zone. I don't think we're anywhere close to that. Okay, anyway, I've got a full show for you coming up next week. In the meantime, all the best to everyone, and see you next week. Bye.